All right, so well, the markets continues to be bloody interesting, I have to say, and we're in uncharted territory, I suppose. So none of us have ever been here before, and so we don't know what's going to happen. But it is, I mean, I have to say, I'm surprised that at the continued strength of the market, and it's not just happening in Wellington; it's around the whole country. And we're going to have a little look, as well as the Wellington market update, have a brief look at a few things happening around the rest of the country too, and also elsewhere other than New Zealand, in the face of continued COVID pandemic extremities and significant economic recessions that are that have happened, and now we're recovering our way out of it, but economies still yet really to feel the full force of it, I think, because the governments are printing money and supporting job holders with wage subsidies and so on. Anyhow, let's have a look at things. So yeah, no sign of a slowdown, and the thing that's most remarkable, I suppose, is that the amount of stock we've got on the market is going from tight to unbelievably tight. So the levels of supply on the real estate the real estate websites, Trade Me being the obvious example, of course, and realestate.co.nz no different, is that we got the lowest levels of stock that I think I've ever seen. And so that obviously is keeping any idea of price drops at bay. So here we have the number of new listings. So again, the blue chart shows you the monthly results, and the red line shows you the 6-month moving average. And so the red line really is the trend. So number of new listings, very interesting, because this is the first time I've seen this for a while. We've got 573 new listings come to the Wellington region in July 2020, compared to 482 in July 2019. So that's actually a big increase. So a lot more listings came on in July than we saw a year earlier. The overall trend hasn't reversed, though, of course. You can see that it's still overall on the way down. Partly that'll be driven by this unusually low number we had back in July, June, May, April, in the month of lockdown, when, of course, very little came to the market for obvious reasons. But now the level of supply seems to be bouncing back, 20% more than last year. So that's good news for sellers. It would appear more stock coming on. And indeed, at Low & Co, obviously where I work, we have a monthly new listings board, and as the month goes on, you can see the new listings getting added to that board. It doesn't mean those listings are yet on the market. It just means the salespeople, all the salespeople at Low & Co, 25 of us or so on, have listed these properties, and they'll be coming to the market in the next 2, 4, 6 weeks or whatever. And certainly in July, we had a very big listing month, bigger than last July and way, way bigger than June or May. So perhaps that is a sign that we have got quite an increase in listings coming on. And indeed, we saw that in July on the websites, and seeing it so far too, I think, in August on Trade Me and so on. So that obviously is good news for buyers, a bit more stock coming to the market. In terms of prices, median sale price continues to strengthen in terms of the overall data. So we're seeing 11% up on July 2019, so 697 odd thousand versus 630. Interesting you see here though, so the red line again is a 6-month moving average, so the overall trend is continuing to be upwards. But in the last 3 months, the median price is lower than the previous 3 months. Median sale price, of course, is a very blunt tool, and a more accurate tool is the house price index, the Real Estate Institute house price index. And perhaps I should actually try and incorporate that into my reports each month, but I haven't been tracking that data for very long. But anyway, I suppose it's too early to tell if this is a trend or not, because you can see, over time the monthly data does go up and down continuously. But I think if we continue to see in the next month or two medium sale prices at that sort of level, then this perhaps is a bit of a trend. And you can see the red line there doesn't seem to be going up as steeply as it was previously, but year on year, by the month, in terms of July, for example, here, the increase of 11% is very little different than it was over the last few months. So no great change there. But if you dig into the data, you can see there that that they are definitely lower in the last 3 months than they were in the previous 3 months. So time will tell if that turns into a trend. How long is it taking to sell? So we're back down to really quite low numbers there. So 29 days to sell versus 33 days a year ago. So a year ago, things were not slow to sell, and in July this year, even shorter, down 12%. And again, if you look at these blue numbers, the blue graph, again, during April, during lockdown, or no, that's May, sorry, May, June, July. Yeah, so during May, it took a long time to sell property. That was because probably it was on the market in April and it never sold, and then it finally sold in May. But so that obviously, that stat there is dragging the moving average upwards. So if it wasn't for that, this line here at the very end would be even lower, perhaps down here. And if you compare July to previous months, you can see it's comparable to other times in the past when the market has really been quite strong too. So the amount of time it's taken to sell property, is definitely it's a short amount of time. The market is tight. The market is strong. It's not taking long to sell property. In fact, you have to go way back to only a very, very small number of months when we were at 27, 25, 26 days. So 29 is really indicative of a very strong market indeed. So it doesn't take long to sell property. How many sales are we seeing? And again, you can see from the moving average number there that and this is a theme that I've commented on every month pretty much, is that the number of sales we're seeing is slowly, gradually decreasing. And does that mean that there's no demand out there and so nothing is selling? No, it doesn't, because if that was the case, then prices would be falling. What this is indicative of, I have to think, is a lack of choice. So there just simply hasn't been enough property to choose from, and so that is constraining the number of properties that can sell. Now, of course, this month we have seen a turnaround in that, and so we're seeing more new listings in July this year compared to last year, but that's the first time that's been the case for quite some time. So the overall level of property on the market has been very constrained, and that, of course, is constraining the amount of properties that can sell. So again, if we see the numbers in the last couple of months, consistent with times gone by, but in July, more properties have sold by 23% than July last year. So it's interesting that we had about 20% more new listings coming on in July and about 20% more sales in the month of July as well. So those two are kind of going hand in hand. The level of inventory, this is the number of weeks worth of supply, and this does continue to baffle me somewhat, because what this is saying, the level of inventory is measured rather in terms of the number of weeks of supply that we've got on the market. So if properties continue to sell at the same rate they have been selling for recently, how long would it take to clear every listing off the market, off the websites, as long as it continued to sell at the same rate and as long as no new properties came to the market? And this is saying 10 weeks it would take versus 9 weeks in July last year. So in the face of properties selling faster and the amount of stock on the websites being less than last year, which we haven't got to yet, but that's what will come out, that suggests that the level of inventory should be going down. And it's actually higher than it's been in sort of recent times, higher than a year ago. And as you can see here, it's trending upwards. So I've actually emailed realestate.co, who produced this data, and asked them, can they please explain how this figure is calculated, because according to my understanding, it's going the opposite direction to the way it should be. So perhaps it's a moving average of some kind, or perhaps I'm slightly misunderstanding how the data is calculated, because I don't understand how, given the raw numbers, how it can be trending upwards like this. So that's a bit of a mystery to me. But as soon as I find out, perhaps next month I'll be able to explain better about how this data is calculated and what's going on behind the scenes there. So this I thought would be an interesting one to look at, because yes, we're seeing low levels of supply in Wellington, and there you can see it here. This is Wellington here. So we've got 10 weeks worth of inventory on the market, and the long-term average is 16 weeks worth of inventory. And you can see up here that nationwide we've got 18 weeks worth of inventory in the market, and the long-term average is 28 weeks. So the whole country is undersupplied. But if you look at some of these other numbers, it's really quite interesting to see that some of the regions have really, really changed their markets lately. So, for example, look at the Wairarapa numbers there. Hopefully you can see that okay. So what this is saying is, in the Wairarapa, there are 7 weeks worth of supply on the market today. And in Wellington, we have gotten down to 6 weeks or 7 weeks sometimes. But our long-term average is only 16 weeks, so we're typically, we don't have a lot of stock on the market, but the long-term average for Wairarapa is 63 weeks worth of inventory. So in other words, the amount of stock that typically sits on the market in Wairarapa is like over a year's worth of supply on the market, and today, or in July, there were only 7 weeks. So this is, I mean, unbelievably eye-wateringly tight, crushingly low levels of supply compared to what's normal. And you can see elsewhere, this is a similar pattern elsewhere. So Manawatu, typically has 30 weeks worth of supply. In July, 10 weeks. Hawke's Bay, 28 is the long-term average, 12 weeks in July. In Gisborne, 32 weeks, 7 weeks in July. And it just goes on. 37 weeks is the norm in the Bay of Plenty, 17 weeks. 124 weeks, that's over 2 years worth of supply, typically on the market in Coromandel, down to 38 weeks. And so on it goes. And so quite remarkable to see that although Wellington market is tight, relatively speaking, it's not nearly as tight compared to what is normal as some of the other more provincial sort of towns or out in the regions. And there is some commentary and some chat around the place that's sort of suggesting that during lockdown we were able to test working from home, and so people are less wed to the cities. They are more flexible in their working, so they are able to work from outside of town and come into town, into the office or whatever, periodically or occasionally. And so some of the demand is coming out of the city and into the regions nearby, or perhaps people have become a little afraid or a little frightened or concerned about COVID, and the lockdown has made them think, you know what, I just want a better lifestyle, and so I am going to buy that property, out in the countryside or by the beach or whatever. And so these areas are therefore strengthening. It doesn't take much to change. A small change from the city going into a region makes a huge difference to the demand and the supply balance in those regions. So it's just an interesting pattern to see that happening over the last couple of months. So inventory is very, very tight across the whole country. We're seeing it in town, but it's even more pronounced, the change in some of the provinces. So that's quite interesting. Wellington region, back to Wellington region here. So this is Trade Me listings, folks. So what we saw earlier is that the number of new listings coming to the market in July is 20% higher than it was previous July. But obviously it takes several months like that, and it takes that stock not selling before the gross number of listings on Trade Me will start to actually increase. And so we're not seeing that yet. So 1,272 listings on Trade Me in the Wellington region. right as of right now, a couple of days ago or yesterday it might have been when I measured this, and compared to 1469 a year ago, so down 13%. And again, the blue chart here shows you that we are down to exceptionally low levels of supply. The only month in the last sort of 5.5 or so years that I've been tracking these numbers that's been less than this was back in December 2019, when everyone stops bringing their properties to the market because it's Christmas time. And other than that, this is the lowest level of supply we've ever seen. Now, it's interesting, I don't show this in this chart here, but when I dig into the numbers in the Wellington region, of course, that includes Pororua, Upper Hutt, Lower Hutt, Wairarapa, Kapiti Coast, and so on. And the number of listings that we're seeing in Wellington City has not decreased compared to last month, but the overall number has. So I'm not talking about compared to 12 months ago here, I'm just saying the change in the last month. So Wellington City numbers have not decreased, but the numbers of properties available in the Hutt Valley and Pororua and elsewhere has decreased by some margin, and so that's dragging the numbers down overall, in spite of the fact that the numbers in Wellington City itself have not decreased. And so that's, again, consistent with what we saw back here, in that the amount of supply that's available in the outer regions is tightening right up, and the same is true of the territorial authorities outside of Wellington City itself. So the amount of properties on the market in Pororua have declined since June. Since July. The number in Kapiti and elsewhere has declined, whereas the number of available listings in the city has actually maintained roughly about stable. So just an interesting pattern emerging there. So just another point here. So it's kind of baffling me. We're seeing that the New Zealand economy is no question in recession, and I don't have the numbers at my fingertips, but a significant drop in GDP. Obviously now we're in recovery mode again. Well, we will now be going backwards slightly, or not growing as fast as we might otherwise, because Auckland's in level 3 and we're all in level 2 elsewhere. But in the face of this recession, the property market is just remaining so strong. And how is this happening? Is it just that the effects of the recession haven't flowed through to the economy overall yet? But people certainly are, suffering. Some people are suffering a loss of income. Some people are losing jobs. No doubt not as much as would otherwise be the case because of the job subsidy and wage subsidy and so on. But New Zealand market is not the only one that is behaving strangely, and I saw some news over the last few days about the UK market and thought it'd be interesting to share that with you. So this here is an extraordinary graphical demonstration of the GDP in the UK, and I'm struggling to see that because there's something in the way there. There we go. So you can see here we are in the UK puddling along. There's the GFC there. So the economic growth there is like -2%, -3% in various quarters. Of course, a recession means GDP shrinkage 2 quarters in a row. And so you can see here back in the GFC, 1 quarter, 2 quarters, 3 quarters, 4 quarters, 5 quarters in a row when the GDP went further and further and further down. And only then was the economy back in recovery, and it's been puddling along at 1%, 2%, whatever it is, 3%, and so on and so on. And then COVID hits, and we have a huge drop in GDP in Q1, and an absolutely colossal drop again in Q2. And so this is like a 20% shrinkage in the GDP. So in the face of that, the English property market is also strengthening. Prices are going up. So New Zealand is not behaving strangely compared to necessarily other countries. I've been thinking, is New Zealand enjoying, or seeing, continued strength in the property market because all the Kiwis are coming back home and the ad immigration is supporting it, bound to be helping in that regard or contributing to that. But I don't know what the numbers of the immigration numbers are in England, but I can't imagine that everyone's flooding home back to England, given the the state of the pandemic and the recession over there. But maybe I'm wrong. Maybe they are. I haven't studied those numbers. But in the face of huge shrinkage in gross domestic product, this is a colossal recession when you compare that to the GFC way back then. This is an enormous impact. We are still seeing strength in the property market in England. And in fact, here are the numbers over the last few months. So this is a monthly breakdown. Here we are in start of 2020. I guess that's March, is that April, May, June. So April was the big dipper where it really, really hit home hard. And since then, there's been recovery starting to take place. But nonetheless, a huge recession there. So we've got a long way to go before we've recovered that 20% loss. So several quarters of growth yet required to undo that recession. So we're a long way out of the woods yet. Remember, this is England, not New Zealand. And yet, there has been a mini house buying boom in England, and has led to the highest ever monthly price in England, in that country. So 1.7% higher than June. And if you're interested, you can refer back to that article there. I'm sure you can find it if you just look at BBC. Not hard to find. So it's not just New Zealand. Other countries are seeing the same thing. I haven't studied other, gone and looked elsewhere in other nations, but certainly in England, the same is being seen, and first home buyers still desperate to get into a first home. And I've been scratching my head thinking, how can this be happening in the face of this recession? And just one thought I had is perhaps that the pandemic has, unsettled people, made people feel nervous about, their uncertain future. And they can't spend money on going on holidays as much, although in England they have been, even though they've been going to Spain and they have to return home in a hurry. But perhaps people are refocusing their priorities and thinking, you know what, I want a stable base. I want a place that I can call mine, that I can make mine is my nest, my little safe haven that I can escape to. And perhaps this is just having people focus more on their home again, rather than spending the money on other things. So even though we've got this incredibly deep recession, housing markets seem to be continuing to be very strong. So just interesting there. Obviously, I don't have any answers, but it's just an interesting thing to observe. And obviously, we've never been here before. We maybe in the fullness of time, we will be able to work out exactly why things have behaved the way they are, and who knows what will happen in the next month, 3 months, 6 months, 12 months. So that's it from me. In summary, we have had a significant increase in new listings in July, and it looks to be the same case in August. So obviously that's good news for buyers, and maybe a bit more choice coming out in the market. Is price growth slowing? We have seen median prices over the last 3 months a little bit lower than the 3 months previous to that. On the ground at the coalface, it doesn't seem to us that as agents that prices are selling, and so maybe it's just a shift in the value of houses that are selling as opposed to the underlying value of those houses. The duration to sell is very low. It's continued back down to really quite low levels since we've come out of lockdown. Sales volumes are high compared to 12 months ago, up by about 23 or so %. Stock levels on the websites, the lowest I've seen. Absolutely incredible. No market pain from COVID yet, unless you're a buyer. Sorry. The buyers are really struggling, and open home lines at properties are enormous, and it's taking an hour or an hour and a half to run through an open home now, because it's so slow to get people through as a property and to register them for the contact tracing and all the rest of it, and only allowing 10 people in a house at once. In the face of this continued strength and economic recession, I firmly believe long-term fundamentals remain strong, and I'm putting my money where my mouth is. I am in the market to buy myself, so I'm not just a salesperson blowing hot air. I am putting my money where my mouth is. But that's all from me. I bid you all farewell. Anyone needs any help, anyone wants any advice, or just have a chat, just reach out. I presume you know how to get me. If you don't, just Google my name. You'll get my contact details, easy peasy. So take care, be safe out there. Have a great rest of the week and see you soon.